Hi everyone, welcome to my weekly analysis for the precious metals. My name is JR. Today is Friday, April 24th, 6 p.m. Eastern Standard Time. Market is closed. Not much changed on the technical front from the previous video, from last week's video. But nonetheless, we'll go over some of these technicals. But before we do, just wanted to point out these three articles here. Of course, as always, the links will be below for your reading. The first video is Lord Rothschild warns investors geopolitical situation most dangerous since World War II. And basically everyone knows who Rothschilds are. These guys really are the founders of, this family is really the founders of the modern day banking system. And these guys manage trillions and trillions of dollars. With that said, they're telling their investors to, they're warning their investors of the political situation, the geopolitical situation, and how they see three scenarios in the next coming years. This will be the four different scenarios. I apologize. The four scenarios that can possibly happen within the next few years. The economic renaissance, muddling through new monetary world, or a depression. But what I wanted to showcase really was that gold will perform in 3 out of the 4 scenarios. The only scenario where he sees gold not doing also great is with the economic renaissance. Let's see what that one is. An economic recovery in the U.S. gives a boost to the world. Monetary policy tightens and interest rates rise. Stronger nominal growth helps reduce debt levels, leading to a virtuous cycle. So basically, the economic renaissance is the situation or the scenario that we might see in play if everything plays out as planned, right? So again, very important to maintain a percentage of your investment portfolio in precious metals. The next article is the IMF tells regulators to brace for global liquidity shock. And in this article here, you see basically that the IMF is warning that there might be a liquidity shock. And I did some further digging, and basically what I got was this. There are big problems. The shocker crushing the economy revealed. And here the IMF says that there's going to be a liquidity shock because of investors hoarding cash, but it looks like it's not going to be investors hoarding cash. It looks like it's the banks. Okay. So here in this article here, you should read the whole article, but I'll just show this. This is the rejection of credit applications. So it does seem like banks are beginning to hoard cash. This is positive, the green, the red is negative. And of course, the rejection of capital of credit application. We see here that we were lending out between 2000 and 2007 and 2008. There was a halt on credit application, a lot more rejections, obviously. And this is what we have so far in 2015. So this is a big indicator that we might see the collapse here coming here pretty soon. We don't know if this is an indicator or what, but this does look a little bit scary, seeing that you saw deteriorating credit applications back in early 2008, and look at what we're seeing here. I mean, this completely destroys every previous application rejection on record. Okay, so definitely, if you have some spare time, definitely look at those articles. But let's get to the technicals, right? Weekly analysis on gold. Gold respecting this sell zone here, okay? And it looks like that the head and shoulders is going to play out. You have your top, your head, your shoulder. This is your head, and this is your other shoulder. And it looks like it's going to come down to at least this level here, the 1160, 1168. All the way down to about around 1145. That's on the weekly side, okay? Let's see the monthly. The stochastics are starting to point lower, so definitely room for downside. Daily chart, very much the same. We have we're right now currently below the 20-day moving average. This is your trend as of now. Okay, this is respecting this trend line here, price action, and it looks like we are going to see further room for the downside, at least as of now. Right, this is your level to look out for. Okay, this area here, not a good level of support. This could be a level of support because this is the level that we broke through this. We broke down this downtrend. So a lot of buyers here, enough buyers to break this trend. And now we're gonna see if this is going to be the low, right? But as of now, it does look like it's gonna point at least to the 1150s range. Okay, that's gold. Let's look at silver. Okay, silver also playing. Silver looks a little bit more bullish than gold. We remember this wedge here, and silver managed to break out of that. And now we have another wedge building, so silver can easily bounce from this level here back all the way up to the 16, to the high 16 level. Okay, that's on the daily chart. Stochastics are very oversold, so we could find some support here on silver. So the silver chart looks a little bit more productive than the gold chart, and we're also catching silver on this uptrend. All right, but as of now, really just trading sideways. You have a high, you have a lower high, you have a low and a higher low, right? So right now in a triangle, so we need to break above or below this triangle here. On silver, really 1527 is really the level to look out for, or you can also draw this trend line here. You can also draw this trend line here, and we might find support at the lower 15 level. But very important to keep in mind that silver, at least on the daily chart, has not closed below 1540. Any price action below 1540 has been very, very limited, and we could see a situation where, again, we might see the low 15s before it rallies back up. Okay, but as of now, still playing within this triangle here. So a break above this would be very positive. A break below this level here, 1520 all the way up to 1560, could be very, very negative here for silver. We'll go up to the weekly chart. The weekly chart meeting or support here. Again, this is the level that broke this trend here. So again, very key level here, and also holding with this trend. Okay, so as long as you're buying into zone, you can put a stop loss at around 15 even, or maybe 1505 or so, and you're looking to create a higher high. Okay, but silver does need to break this high in order for silver to start looking at all bullish. Okay, and stochastics are still pointing down on the weekly chart, and again the 20-day moving average is moving sideways, so we're pointing at 3 o'clock. That's very neutral, and as always, what we're looking for is a move above the 20-day moving average down, break above, and break establish resistance, which is set at around 18 and a half. Right, first attempt, no bueno. This has to be either the second attempt here, or this is going to break down and continue to go down further. If we're looking for support, if silver does break these levels, then we would need to go back to the bigger time frames. This is the monthly time frame. Okay, and this is where I would look to find some resistance on silver, roughly right here. Okay, you can probably go down to this level as well. All right, but if silver does break this level here, the 1440, I would expect some support between 11,984 all the way up to 1416. If you buy around this area here, that's probably going to be one of the best prices you're going to find. Again, a move below 1884 really would be a move below $12 really would be catastrophic for silver, because again, on your monthly charts, this is the last area of support. Actually, I might be able to draw another line here. Let's see. Okay, so really this might be the level here that we're looking for, between the 14.20. If I see $14 prices, I'm buying. If I see $13 prices, I'm buying. I won't buy anymore below those levels. So this is the area again where you want to buy. If it touches this level here, 14.20, you have to be a buyer at that level, because at this point what you're looking for is you're looking for this level here to continue to hold as support. All right, support here, and from there we would imagine that this line is going to do the same thing that it did here, and the same thing that it's going to do that it did over here. Okay, high, fall below this level here, you're in trouble. Okay, and that's about it, guys. I hope you enjoyed the video. We'll see you next week. Bye bye.